In this video, I want to talk about what's happening in the car market as we approach the end of 2024, because there are three things that I want you to pay attention to. Number one is what's happening with car companies, because we're seeing a range of car companies boom to car companies really struggling. On the booming side, we have GM, whose stock is up by around 40% year to date. In the middle, we have Tesla and Ford. Tesla stock is up by around 5% year to date, and Ford stock is down by around 6% year to date. And then on the opposite end of really struggling, we have Stellantis, whose stock is down by around 40% year to date. This brings me to the second thing that I want you to understand, which is auto sales and auto loan delinquencies. Because what we're seeing is that auto sales are flat, while auto delinquencies are rising. We're seeing a similar issue here in the auto market as we are in the housing market, which is the cost of car ownership has been growing faster than incomes. Over the last 5 years, we have seen household income rise by around 18%, versus the cost to buy a new car has grown by around 25%, while the cost of car insurance, the average car insurance, has grown by around 50% over the last 5 years. So household income has grown, but not fast enough to keep up with the growing cost of car ownership. Not to mention the fact that if you feel like everybody and their moms have been buying a luxury car, your intuition is right, because we've been seeing a lot of people upgrade what type of cars they drive as well. The data shows us that between 2017 to 2022, the number of people buying a $60,000 car or more expensive has tripled, from 8% of the population buying a car to 25% over those few years. And that could partially be contributing to the reason why people are struggling to afford their car payments, which is why we're seeing auto loan delinquencies rise. And the third thing that I want you to pay attention to is what I like to call the X factor, which has to do with politics. What does that mean? Well, obviously we have an election around the corner, but we also have different policies which could impact the car market. For example, former President Trump has talked about imposing tariffs on car manufacturers if you're manufacturing your cars in places like Mexico. So what does that mean? If, hypothetically, former President Trump is elected and he imposes these tariffs, because he's talked about imposing 100%, even 200%, whatever it takes, tariffs to stop car manufacturers from manufacturing the cars in Mexico, then that would mean that we're bringing car manufacturing back to the United States. But that also means that the cost to manufacture the car would likely go up as well, because an employee in the United States is more expensive than an employee in Mexico. So that could mean that the production of that car becomes more expensive. Yeah, more jobs in America, but the production of the car could become more expensive, which could potentially push up the price of cars. Will that happen? I don't know, but it's something that you want to think about. But what we do know is that the inventory of cars in America is also rising. What we saw is that the total number of cars unsold in October of 2024, this month, is up 25% from October 2023. And this is the highest number of cars unsold that we have seen since the beginning of the pandemic. Now you might be wondering, well, Jaspreet, if that's the case, how come every dealership isn't slashing the prices of their cars? Because although we have more inventory today than we did back in 2020 or 2021, we still have less inventory relative to where we were pre-pandemic in 2019. So let's break this all down with what's happening in the car market. But I want to remind you that if you're an investor and you want to stay up to date, not just on the financial markets, but you want to get a deep dive analysis report on shifts that we're seeing in the markets, if you want to get a deep dive analysis report on market shifts and financial trends and investment ideas, if you are a stock market investor who has at least $500 a month to invest, you may want to check out Market Briefs Pro, which is our more exclusive premium newsletter for fundamental stock market investors. If that is something that you're interested in, I have a video where you can learn more and apply for a content demo for Market Briefs Pro. If that's something that you're interested in, I got the link for you to learn more and do that down in the description below. The reason why the car market is such an important part of our economy is because it's kind of like the housing market, where most people, especially if you're not in a big city, have to have a car or two. So it's kind of like a house. And it's one of the major purchases that many Americans make. In fact, for the average American household, it's the second largest purchase that you'll make in your lifetime after your house. And this is why it's so important, because not only do you have to think about buying the car, but for a lot of Americans, you also have to think about the financing. So it impacts a lot of people, because it impacts the car dealerships, it impacts the car manufacturers, and it also impacts banks. That's why the car market is so important in our GDP, in our economy. And this is where a lot of people are paying attention to what's happening, because we're seeing this big range of confusion in the car market, because you have companies like GM whose stock and company has been booming, even though they've been doing layoffs in 2024. And on the other hand, you have companies like Stellantis who've really been struggling and doing layoffs in 2024. And if you remember what happened back before the 2008 financial crisis, the car companies were hit extremely hard. Ford, GM, and then Chrysler were all hit very hard. GM hit bankruptcy, went bankrupt. Chrysler went bankrupt, and Ford was on the verge of bankruptcy, which really decimated not just the Michigan economy, but economies around the country, because they impact so many people. Because you have the car manufacturers, the car dealers, but then you also have the tier 1, the tier 2, and the further down the line suppliers. So as less cars get sold, it impacts the economy in many different ways. That's why the car market is so important to pay attention to, because it's kind of like the housing market, that if you see a slowdown in car sales, it impacts many different types of jobs. And so when many people try to get an indication of what's happening in the economy, they like to look at things like the car market, because it can give you that indication. Now, one of the things that we've been seeing up until recently is that car prices were booming. It didn't matter how expensive cars got. People kept paying extra money for the cars. People were paying well over MSRP, especially for luxury cars. And it was something that we've really never seen before, where people were willing to pay whatever for a car. And cars for a limited period of time became an asset. What did that mean? You could go out and buy yourself a Corvette, drive it around for a year, and then sell it for a profit. That was a very unique situation. It doesn't normally work like that. Typically, cars are liabilities. And I want you to think of your car liability, which means when you get into that car, it is going to lose value. As soon as you drive the car off the lot, it is going to lose somewhere between 15 to 20% of its value. Then it's going to lose another 15% over the next year, another 10 to 15% the year after that, another 10 to 15% the year after that. And this is where you want to pay attention to this, because over the last few years, we've seen a lot of people really get excited by this idea of owning G-Wagons, of owning Escalades, of owning these really nice and exotic cars, which nothing wrong with that. I love the idea of you driving around in your dream car. I just want you to be able to afford it first. And so now what we've seen happen over the last few years is that car prices have shot up about 25% over the last 5 years. And that's an average. Some cars have grown by even more than that, some a little bit less. But on average, we've seen a 25% growth in new car prices. But the average person is not buying this car with cash. They're financing this car, or they're leasing a car. Now, whether you finance or lease a car, the interest rates matter, because the financing company is going to take a look at what interest rates are when they're deciding your lease payment and when they're deciding your APR on your financing. And today, interest rates are significantly higher than where they were 3 years ago, which means if you want to go out and buy a car today, not only are you paying a lot more dollars, but you have to pay more interest on those dollars to drive around in that car, which is why car ownership has become so much more expensive. But that's not all. If you take a look at any of the recent CPI reports, CPI is our inflation report. The number one highest number that has come up on the CPI report month after month after month has been car insurance. Car insurance has become extremely expensive. Car insurance prices have grown almost as fast as the housing market over the last 5 years. We've seen car insurance prices go by around 50% over the last 5 years, which means now you're going out and buying a more expensive car. I'm not even going to worry about the premium gas. I'm not even going to worry about the more expensive maintenance. You are going to have to pay more dollars, pay a higher interest rate, and then on top of that, you're going to have to pay even more insurance. Not just because insurance is more expensive, but because you're also buying a more expensive car, so your insurance is even more expensive because of that as well. And this is why car ownership has become very unaffordable for a lot of people, because now they're looking at what their neighbors drive and they're saying, you know what? Every single one of our neighbors has a BMW or a Mercedes or a Jaguar. Maybe we should not have a Toyota Corolla or a Toyota Camry anymore. But this is where I want you to remember. Your car is a liability. It is not an asset. Your car is not there to put money in your pocket. And every time I talk about this, I always get a flood of comments. You'll see them today of people saying, well, Jaspreet, if you know how to buy the right car, you can sell it for a profit. Yeah, do you know how many people actually sell their cars for a profit? A very, very, very small fraction of people. If you are a professional in the car industry, then sure, maybe you can find a way to make a business out of car ownership, but for the average person, for 98% of people, it is not. For 98% of people, your car is a liability, and if you really, really want to be financially smart, do not finance your car. Buy a car with cash. And that's more difficult today than it was 2 years ago. It's more difficult today than it was 5 years ago. But it's still possible. You can still find a decent, good working condition car for under $10,000 that will get you to where you need to go, that'll be safe, that'll be reliable. Maybe you don't get the BMW that you want, maybe you don't get the Jaguar or the Benz that you want, and you drive around in a Toyota Corolla for a little bit longer. But if you can do that, you can save the $400, $500, $600, $1,000 a month you would be paying for your car payment, not to mention the more expensive insurance, not to mention the premium gas, not to mention the more expensive oil changes. Keep the money in your pocket and invest it instead, because what we have seen happen is while car prices have grown by 25%, household incomes have only grown by 18%. The stock market has almost doubled. The S&P 500 has grown by around 100% over the last 5 years. Now, of course, past performance does not indicate future performance, but what we do know is that over the long term, investors are the ones that win. And if you want to be a winner, you have to understand that you have to be an investor. And sure, we have risks in our economy. Sure, we have risks to the stock market. Sure, we will eventually see a recession. Sure, we will eventually see a market crash. Nobody knows when. We know it's a part of our system. But despite the market crashes, despite the recessions, our markets are still growing. Over the last 25 years, we have seen 3 once-in-a-lifetime recessions. We have seen 3 once-in-a-lifetime market crashes. We saw a once-in-a-lifetime recession and market crash in 2020 when the pandemic hit. We saw a once-in-a-lifetime recession and market crash in 2008 when the great financial crisis hit. We saw a once-in-a-lifetime recession and market crash when the dot-com bubble burst. Yet each time, after the market crash, the markets continued to break new highs. Our economic system is designed to benefit investors. It's not designed to benefit consumers. And we know that inflation is going to keep happening. And so if you really want to be able to build wealth, you have to be able to sacrifice that car that you want right now. That way you can buy the assets, buy the investments, build your wealth, and then buy whatever car that you want. I'm not against you owning a BMW. I'm not against you owning a Jaguar, a Rolls Royce, a Lamborghini. I want you to buy whatever you want. I just want you to be able to afford it. See, that's the key. I'm not against having nice things. I just want you to be able to afford them, that we don't have to make your bank richer and the car company richer at the expense of you being rich. Make them richer when you have the money to distribute, but make yourself rich first. That's the key. Now, if you've been seeing a different background, it's because I've been traveling for a little bit. I'm in Manhattan right now. I have a little bit more traveling to do, which is why I'm out over here. So I appreciate your patience. And again, if you are interested in Market Briefs Pro, I have the link to the content demo down in the description. Just watch the video. And after you watch the video, you can apply to see if that is something that would be a good fit for you. And with that, I'll see you on YouTube tomorrow.